Kia ora, it's Joe. We're just going to go through an example of a bonus issue in shares for a company called BC Company Limited. All right. Okay, so on the 15th of January, BC Company Limited sold one of its buildings for $20 million in cash and realised a capital gain of $5 million. So it would have been in the books at 15. They've sold it, they got 20. So that $5 million would be a realised asset revaluation. So they've realised the gain, a capital gain, right? So as this company obviously isn't a property trading company, basically that's just a capital gain, doesn't go through the P&L, the income statement. Okay, so then on the 1st of March, the directors of the company distributed the realised gains by making a 1-for-5 bonus issue. Okay, before making the bonus issue, the company had $25 million paid up share capital, 5 million fully paid shares on issue. Okay, what we need to do is prepare the journal entries to record the above transaction related to the bonus issue. Okay, calculate the total number of shares after the bonus issue. Okay, so let's start with the current scenario. What have we got? We have 5 million shares, 5 million fully paid shares. They're worth 25 mil, so that's good. Then we're going to issue, we're going to issue 1-for-5. So on the 1st of March, we're going to issue 1 share for every 5 there is. So that's 1 million. Okay, and we're going to issue them for that $5 million realised capital gain on the sale of the business building. All right, so that gives us that. Okay, so totally we'll have 6 million. So that's the answer to the B first, and they're going to be worth $30 million. Okay, that's the paid up capital in the accounts. Right, so how do we bring in this journal? It's actually not that hard at all. Okay, we're going to reduce the asset realisation reserve down by 5 mil, and we're going to increase the paid up capital by 5 mil. All right. So what effect does that have on the company? Nothing as far as cash goes. It's just really moving something in the capital account from being a reserve to actually giving that benefit to the shareholders, or recognising it as shareholders' funds, right? So that's all we've done. We've increased the amount. Okay. The next one here is BC Company Limited has asked you to explain share options, what they are and what types they are. Okay, so there's a couple of different types of share options. I'm not going to give you the answer. I want you to research this. They also want you to explain share splits and what effect they have on the accounts. Okay, so back in Tanya Limited, we did an exercise on share splits, so you've got an understanding of what effect that has. Okay, so you can see that pretty much no real effect. There's no sort of change really in the set of account, or there. Obviously, where it says how many shares there are, it's going to say there's a larger amount. Okay, but the paid up, the dollar terms for the capital doesn't change. It's just the number changes, right? Okay, so here we went the preference shares went from 350,000 okay, up to 700,000. So that's the final exercise, and that's BC Company Limited. So yeah, continue working back through these exercises till you're comfortable that you can do the transaction for each of these scenarios.